Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. It is Thursday, May 9th. This is Market Call. It's 1 p.m. on the East Coast, which makes it 10 a.m. on the West Coast and various times in between the oceans. Yes. In other words, depending on where you are from California to New York, there are different time zones.
And you can be doing different things.
You could be doing different things
by requirement.
Almost by necessity,
Right.
yes. As you can tell, I'm here with the great Carter Worth joining us in studio. So yesterday, Elizabeth Young was in that seat. Today, that's you. I am honored to be joining you both. Last night, the Knickerbockers of New York emerged victorious, as you may or may not have watched, at the world's most famous arena. Jalen Brunson once again proving his worth. And again, I'll say this, Carter, the greatest free agent signing in the history of New York sports. Don't at me. That happens to be true. Rangers play tonight. Yankees play at 5 o'clock today. Same time the Fast Money goes on. I mention that because you will be joining us on Fast Money today on the desk 2 nights in a row.
This is right. Nothing like a night game, though, out there at Yankee Stadium.
Exactly. But this is, so it's a big, it's a lot happening here. So it's great to have you. But let's take a look at the rundown because we're going to let you folks know what we're talking about. Oh, I missed. I was a little late. More bond volatility coming. Carter thinks so. I do as well. Of course, the problem is we think different reasons, but it doesn't really matter. That's what makes markets. I like what you did here. Hi-ho silver. Now, for you, again, if you're out there, if you were a fan of the original Lone Ranger, Jay Silverheels played Tonto. So I just love the whole thing. And we do a little earnings preview of HD, I believe that's Home Depot, Walmart, Alibaba, and John Deere, although now it's called Deere & Company. And if we have time, we will take some questions. Carter, how are you?
I'm good. Lots. This is about it, though. We're at the end of this week. We have the bulk of the earnings.
Done.
And while retail comes in later, REITs and so forth, this is it. And we do have 1 or 2 big ones left. But essentially, we know what the quarter has produced, and it hasn't been that bad.
As we used to say in high school, although I was not one of those people, I've never puffed the magic dragon. There was a saying, stems and seeds. You're down to stems and seeds, and that's where we are. But let's take a look. You brought all these charts from Worth Charting. So we're going to start with the U.S. 10-year Treasury bond yields. No lines, no annotations, no judgments. Right. I know the whole. So let's walk through this.
Let's walk through it. So I guess the big issue is we really aren't higher. I mean, if you just sort of step back and say, what is the cost of 10-year money at the Treasury? 4.5% is not high, right? And there is no difference between 5 and 4. And yet those zigs and zags create great anxiety in the markets and great movements in the S&P and other re-ratings of risk assets. And yet at the end of the day, it has not been higher for longer in an important sense. Let's put in some lines. And so we have a very well-established trend line. We have a break in trend. We have a counter trend rally back up to the underside of the trend line, and we have struggled and are struggling right here. But the main takeaway is this, that in October of 2022, that spike in rates, we were at 4.34%. And here we are, basically more than 18 months later, and we're at 4.48. So if you think about that, guy, rates have moved up 12, 15 basis points in a year and a half. But since that period, gold's up 40, S&P's up 36, copper's up 32. It's rates that have done absolutely nothing. And let's say this, unless and until we were to go above 5, I think one has to continue to make the bet that rates are not going higher and that it's a better play.
Well, it's a timely call by you because I believe we just had a 30-year bond auction, although I don't have the details. The move in the TLT, Amanda, if you want to throw up a TLT chart in real time, suggests that the bond auction was successful and was better than probably feared because the TLT has now rallied. If you do a shorter term, you'll see exactly what I'm talking about, which means yields theoretically have gone a little bit lower. So I will tell you that, 10 minutes or so ago, the TLT was probably trading about 90.18. Now it's trading at 90.33, which doesn't seem like a big deal, but it suggests exactly that the market is breathing a collective sigh of relief and yields are probably headed a little bit lower, which probably means the broader market is on its horse as well to the upside. So you start to connect the dots. So there are your charts with annotations. Now, if these were to, again, make sense, you could start to connect some dots and some other things, which brings us to what different sectors have done since April 2nd until now. And it sort of makes sense, quite frankly, that the utilities are actually doing well as yields have come down. Thoughts on that?
Well, that's right. So those are the two most defensive sectors there are, right on top: utilities and staples, non-growth areas, but provide better than average dividend yields, and then down from there. In the period, the S&P itself is down about 30 basis points. And so the question is, do we chase the utilities here or not? Put out a note yesterday pulling in our horns. And what it was about is that the call to buy utilities in April 2nd, now it looks like we're a bit too far, too fast day to day. And if you look at the XLU, it's very steep hour to hour, and I think it's right to start to harvest.
Let's look at the chart you brought, because it broke that pennant formation like you thought it would. And here we are, probably approaching levels we last saw, I want to say, I don't know, maybe June of last year or so. So I guess it makes sense that, this is a logical place for it to sort of stop. Now, you could do a back and fill, and you would have still broken that downtrend line. But that, that correction could be steep in the meantime.
Yeah, it's just a big, an important move out of an important formation, and just day to day, hour to hour. I would literally say it that way. The angle is increasingly sort of unsustainable, and hence the thought to pull in one's horns to reduce.
Makes sense. The other, again, I mean, so much of this is predicated, again, on the bond market, and we'll see how this whole thing shakes out. As I mentioned, TLT is now probably 90.37 or so. So, open on the lows effectively today around 89, 85 or so. Now it's trading 90.35, 90.37. Again, means yields have come off a little bit, means the stock market is going higher. So if yields continue to move the way Carter suggests, it is probably right to think that, utilities, although they come back up a little bit, are going to sort of maintain that bid. The other thing that could be interesting, and they're not related at all, but I think tangentially maybe so, is the commodities market, specifically silver, which maybe is starting to peek up its head for the first time in quite some time.
Well, the sequencing is good. So we have this big thrust, the check back, and then the bounce. Let's put the lines in that would depict that. So the breakout is clear. The check back is clear, stops to the penny, and then the reassertion of strength for the past 2, 3, 4 days. Let's pull this chart back a little bit, different time frame. One more chart, pull it back, and the idea is that we can make it to the high, the former highs. You'll see a green line coming up at the 28 level. I think at a minimum that's the price objective for SLV.
Yeah, and it's one of those things, we talk about this all the time. So that's your chart, and I agree with you. If you think about gold, effectively, I know it's come off a little bit over the last couple of weeks, but gold's basically at its all-time high. Silver is still 50%, a little more than 50% of its prior all-time high. And I'm not suggesting it's going to $50 or north of $50. However, if it would go just instead of, half of its all-time high, maybe 70% or so of its all-time high, you're talking about a $35 instrument, which is, by the way, it's where I think it could go. With that said, one of the names that I look at, there are a couple. So it used to be called Silver Wheaton. And if Amanda and or Jacob could pull up WPM, I think they call it Wheaton Precious Metals now, you'll see a very defined series of highs right around current levels of $54.50, $55. So a longer-term chart will suggest exactly that. You can see that double bottom, and that traded well, but here we are. This looks like, again, Carter, I'm asking you to do this on the fly. I mean, this looks like one that we're against these prior highs. It looks like it's ready, as Dan would say, to party. And I think the prior all-time high was made sometime, I think, in 2020 or thereabouts. So we're getting close.
Yeah, I mean, this is the definition of a setup for a prospective breakout. We don't know that it's going to break it, but that's what making bets are all about. I would bet it, and I would bet it large breakout.
No, I agree. And, gold is still out there. And I know you brought the silver charts with you, and I'm all aboard with silver. But anything in gold, I mean, does this little bit of a sell-off scare you? Does it make sense? Are we headed back to the moving average? I'm still in the camp that gold's going higher. Maybe this is just a bit of consolidation here. Thoughts on, because I will say this. I don't think gold is it's a commodity in name only. It's not a commodity in terms of having an end use like a crude oil, like a gasoline, like soybeans, cotton, whatever you want, copper. Gold is more of a utility in terms of what it means, in my opinion. So thoughts on the gold market here?
Yeah, same thing. We have this very important range for 3 years. You have an important breakout, and normal dips, normal pullbacks are part of the process. So take advantage of the dip. There's every indication that gold has a lot more room to run.
Next week, as you mentioned at the top of the show, we're getting down to it in terms of earnings. There are a couple that stick out to me. So let's take a look. Monday, nothing of note necessarily. Tuesday, I do think Home Depot is pretty interesting, given the fact that it hasn't traded particularly well for quite some time. Alibaba is its own animal. I like it, by the way. It's seemingly starting to get off its horse. We can talk about the FXI as well. Cisco, not all that interesting. I will tell you, Ross Stores, and you have charts there, are going to be interesting, as is potentially Walmart. So now that we know what we're looking for in terms of next week, let's look at the charts that you brought on the back of some of these names.
Yeah, I mean, obviously, Walmart's the big one. It speaks to so much of the economy. It speaks to consumer staples as the biggest grocery store, if you will. It speaks to how people trade up or trade down, depending on where they are in their particular sort of economic standing. But the Walmart chart, this dipping, this flagging, this general pulling back over the course of several weeks. The question is that the pause that refreshes or not? We've been in a channel. We can put that in ascending, and so we kind of backing and filling at this level. I suspect it's more of a pair of twos. It doesn't seem that directional to me, and I would say no real bet.
Yeah, what I will say is you're probably right, and we could, you were at the upper end of that channel, which has been well defined for quite some time. We've seen many times before that when there are channels like this, you sort of either gravitate down to or levitate up to the middle of the channel. In this case, it would be sort of a gravitational pull down to the middle of it, but I wouldn't run too far away from Walmart. I think this environment lends itself to exactly what they do. So we'll see how that plays out. Home Depot is the one, though, I think is really interesting because, as I mentioned earlier, it has not traded all that well for quite some time, but you're seeing something that's interesting to you.
Yeah, so a big move, and you can see that, and then a big give back. And the give back is the stock is finding its footing at or near the 150-day moving average. I would draw the lines this way. If you look at the next slide, what we've got is there's a very tight downtrend, and we moved above it. Another way to depict the lines is this. So it has the elements of a reversal of this past 10, 12-week sell-off, which has been substantial. And I think you play for a bounce here.
Let's look at so these are Carter's charts, which are static. Let's look at the real-time charts and go back, if you can, Amanda, all the way back to you go back to 2020 and so, and you can see that it made sense, the move we saw in Home Depot. If you think about, people were sort of cooped up. You had that initial move lower with like everything else on the back of COVID. Then people realized, well, wait a second, we're stuck here. So we're going to do things to basically fix our homes up. And the entire narrative made sense. I think the stock peaked out in December of 2021 or so, north of $400. But as I mentioned, since then, it's been lower to sideways for the entire time. Now, a lot of people say it's a consolidation. That moving average is still intact in terms of not sloping lower. We've tested it a couple times and basically bounced off of it. So your call makes a little bit of sense. So we'll see. I mean, this is what the setups you're looking for, I think, in the earnings. A lot of people will say, this consolidation for that period of time is a very strong sign. Others will say, it has underperformed the broader market that's done extraordinarily well. You're looking at through the technical lens. So I guess my question to you is, does this set up for that move back to that prior high?
Well, I mean, if we go back to the sort of the more immediate day-to-day chart, the bounce that's I think underway, at least you carry back towards the midway point from the level you sold off. So filling some of those gaps just up there above. And I would say, getting back to the former high easily, that will take time and price, but playing for a pop here for sure in response to earnings.
Ross Stores is another one that reports next week. This has been an interesting, you've had some pullbacks, bounces. It's basically been following, if you look at it. Now, you mentioned all the time how these moving averages effectively become, in their own way, sort of trend lines. And, the moving average is working in your behalf. This is, if I had to guess, is this the 50-day? The way it looks, that's what it looks like to me.
It's a 5-year chart. The daily, it's always the 150.
150. So here you go. I mean, we're following it. The moving average suggests that direction being higher. Let's look at your charts in ROST.
So it's got the 150-day there, but it is a heck of a trend, and we can show that. You'll see a red line coming up here. And basically, we've come down to a level of support, and that's the same concept with Home Depot, that after a sell-off, that itself is in response to a preceding steep move. If the sell-off is enough in terms of magnitude and duration, at some point it abates. And in fact, that's happening here, right? We're starting to bounce off trend, and the green arrow, that's a judgment, is that we go higher.
It's interesting because, you look at Ross Stores. When I think of that, I think of sort of TJ Maxx. I don't know, man, if you could throw up a TJX chart. They're going to look similar to a point. TJX has been a monster of a stock, a monster of a company for quite some time. But, even if Ross Stores were to get, and that's sort of so you can see it's been basically lower left, upper right. I think the all-time high in TJX, if I had to guess, was made recently around 102 and change or thereabouts. We've pulled off a little bit, but it's one of these stocks where it doesn't give you that many opportunities. It has, a couple years ago, but since then, every pullback's been bought. And I think when you look at a TJX and you start to connect the dots, it probably suggests that Ross Stores can make a similar move. I don't think you're going to get an exaggerated move in TJX, but given the fact that Ross Stores has probably been meandering a bit more, you could get some of the beta in ROST, Carter.
Right. So this is what a hold is, right? Wall Street, again, the sell side uses hold as a euphemism for sell. Only 5% of all stocks are sell rated because no one actually wants to put that label on it. So they say hold when they really mean, hey, quietly, we don't like it. But if you take the actual word itself, a hold means you hold it. This is not something you have to run out and add to, run out and dump or hedge. It just is a good, steady, orderly uptrend, and one has to respect that. And so you hold it.
There's some legacy companies that have done well, some legacy companies not so much, and other ones sort of find themselves in no man's land. And I think Cisco is probably that no man's land. You brought some charts, but your work suggests that maybe no man's land is going to turn into, this iteration of Intel. So let's walk through Cisco real quick.
Yeah, I mean, look at that thing wandering across the screen. It's winning and it's losing, and it's losing and it's winning. That's 5 years of a life. Think about that. With a fraught drops and gaps, then gaps up, then gaps down. It's basically the kind of thing you want to stay away from. Now, if we put in some lines, I think the risk is you drop.
Yeah, and the moving average suggests exactly that. And, as much as you'd like to say we're right up against support here, support and Intel meant nothing. And, this is an environment fundamentally where, if you're not operating well, you're going to get punished. And you've seen it. Throw up an Intel chart real quick, Amanda, if you will, just to sort of see what can happen when you let basically the rest of the industry lap you in a pretty significant way. And, that's Intel. And, the move, that's it over a longer period of time. If you look at it over the last sort of 6 to 9 months, I mean, against the backdrop of not only a broader market that's done well, but their sector that's done well, this company can't get out of its own way, which is an indictment of the company. But it suggests, again, that, if you're not keeping up with everybody else, the market is going to punish you. And, Cisco might be setting up for exactly that. And again, I know they're completely different businesses. That's not my point. But thematically, there's a lot of similarities there.
I mean, totally. It's just an instance of something that's not participating in general market strength and has been under pressure. And that's what idiosyncratic weakness is. It's something that's specific to the company, both in the case of Intel, in a period where semis are doing very well. And then that's also the case in Cisco. And Cisco is sort of its own animal. But I think they still have, 70% of the market in the world. But Cisco, Intel, these are the kind of things, just stay away.
Alibaba is a name that we've talked about on Fast Money. And, it's not coincidental. I think when Jack Ma sort of disappeared in the fall of 2020, that's when the stock sort of topped out. And a lot's happened since then. What I will tell you is, since that period of time when this stock has been awful, you've had at least 8, if not 10, 25 to 50% bounces to the upside that have been subsequently sold. But if you caught those bounces cold, you've done extraordinarily well. And I've thought now incorrectly for a while. When I say a while, the last couple months, as Alibaba was down around, $70 or so, that we were setting up for another one of those moves. It has not come to fruition yet. However, your work suggests that maybe I was just a tad early in my assessment.
Yeah. First, that guy was so. Yeah, he disappeared. Did he reappear ever?
He subsequently reappeared. Yes.
Yeah, you got to wonder if you're in a country where you're doing your business at your desk and you just could disappear. That's
unfortunate.
Unfortunate circumstance. In any event, that's a hell of a sell-off. Let's just depict that. Look at this. I mean, you're talking about something wowza, right? You're losing. You're almost out of business, and then, for what it's worth, is trying to make the turn, right? Faltering, trying again, faltering. But the key is we've still never gone back to that prior low. And that's what sort of developmental action is. And I think we're making the turn. And so it's asymmetrical. You commit capital and it just wastes your time, or it actually works. But going much lower from here, enough time is passed since that low to suggest that these are sort of terminal values for Alibaba, if you will, and that, again, neither is a nice trade that pays off at 100 or 150 or 200, however high the imagination will allow, or waste your time. But it does not have the feel at this point of something that's going to slip below the surface without a trace.
Yeah, I agree with you 100%. And I'll take you to an FXI chart, Amanda, if you can. And if you want to go back a few years, or if you want to go back all the way to the financial crisis in 08 with the FXI, what you're going to see is a very well-defined bottom that we outlined back in, we did it into the fall. We thought FXI could trade down to sort of 21 or so, which was sort of the low that we saw a few years prior in the fall. And then you go all the way back to the financial crisis, and you can see effectively that's the same level we traded down to. So you have a very well-defined support level in the form of that. And I will tell you, since January, listen, it has not been an amazing in terms of its performance. However, from 21 to current levels has been a decent little stealth move that I don't think enough people are paying attention to. So when you overlay the FXI and say, okay, that seemingly found a bottom, Alibaba obviously is a component thereof. I think it's just a matter of time before Alibaba catches a move. And when I say, catches a move, 70-ish being that low, either side of 80-ish now. I mean, this is a stock that could easily make its way into the 105 to 110 level. Nothing's changed in terms of that upper left, lower right, but you're catching a bounce that you've been waiting for quite some time.
Tencent also part of this. If we look at Tencent policy, that has been an important move, leading the way ahead of a Baidu, Tencent also ahead of Alibaba. So that I would look to as the leader that will basically indicate the others are on their way.
Used to be John Deere. Nothing runs like a deer. Then they decided to change it. That's their prerogative.
I would have stuck with the John Deere.
I would have stuck with the John Deere as well. That's me.
Whereas like Federal Express moving to FedEx, because we call it that makes sense.
A little bit.
I
mean, there are other things along the way that have changed.
No.
I mean, we're splitting
your name
here.
from Google to Alphabet. I don't know.
Think about when Facebook changed to, and I still won't say Meta, but that was anyhow. John Deere reports next week. Let's take a look at these, because again, meandering for quite some time. You had a huge move to the upside, seemingly made sense. Been going sideways for a while. Is this consolidation ready for a breakout? Carter's work is going to tell you exactly what he thinks is going to happen.
Right. So huge move from the COVID low, 100 to 400. That's some good eating, if you will. A four-bagger and a mature, not even a growth industry, a mature growth company that's basically not even growing, just growing with GDP. And then this massive 3-year consolidation. And so it's anybody's bet, sort of as the expression was, gentlemen, start your engines, which is this going to break out or break down? I've depicted the lines this way. Let's do it another way. If there's the range, let's do it one other way. And then I think this is the tell, playing for higher prices here. And it's been such a laggard to Caterpillar. There's a bit of a catch-up trade.
You know what? And just getting back to those prior highs, I mean, that's a little bit of a decent move here. So, we're going to see what happens there. I'm with you. If you go back and look, this is a stock that has absolutely surprised some people to the upside on a number of occasions. And, you have some time in earnings next week to potentially play it with options. And I can't speak intelligently about what the premiums are right here, but that might be something to take a look at, or just playing it with a long stock position. But, again, his work suggests back to those prior highs. It makes a lot of sense to me. We got a couple questions, which I know you're capable of talking about as well as myself. Wavy McFly, who again we discussed yesterday. Wavy's back. What are your thoughts on insurance stocks? They all seem to be breaking out, big insurers and small. Well, Chubb is the first one I think of, CB, and I have not looked at it, but my instinct suggests it's probably right around its all-time high. And this is one of those names, lower left, upper right, and yeah, I'm pretty close. So I'm with you on this one. I don't think you run that far away. What I'll tell you is, and the one that looks maybe most interesting to me is sort of a MetLife, and that's MET. So the prior high, I believe, was in December of 2022. We traded off, but we're starting to get back to those levels. And I think you're right. MetLife is, not a pure insurance play necessarily, but as close as, I think close enough to answer your question. This is one I think, Carter, is interesting. But I'm going to give you one more. Prudential, PRU. Again, similar to MetLife, you're going to see probably a series of tops here if you go back and look that, again, suggests that maybe we're on the precipice of breaking out as well. So your thoughts on that?
Right, a couple are there at the presumptive breakout level. To put that in context, if you look at Hartford, HIG, same time frame, same weekly chart, what you'll see is this one already broke out, right? And so you're talking about going from 100, 75 to 100. And it looks, because it's a logarithmic scale, so it mutes the rate of change. But if you see here, you'll note that there's the breakout, sort of in a more clear depiction. Do they all do what HIG has already done? That might be a stretch, but there is the possibility, right, that others could join HIG in what would be a multi-year breakout.
We have a question. We don't get this often. This is from Adam Beauregard. Love your last name, by the way. Can you talk about ELF, ELF? That's a beauty company. I haven't looked at this in a while. So let's pull up a chart if we can. And now I'm looking at it on my screen. And
it's a runaway bull.
I don't know if it's a runaway bull, but, you had a huge move to the upside. And then you've got this little consolidation here. That's what interests me. Those couple different lows we've made over this last period of time, probably from March, April or so. Maybe that's enough. Maybe that consolidation there is enough to say, you know what, maybe this is one worth taking a play. I can look at my eye and say, you could probably draw a trend line. If your man to go shorter term, you draw a trend line from that high, probably connect a couple tops, and we're probably getting close to a downtrend line that's been in place for a while. We'll see. But this looks sort of interesting to me. Thoughts on that? That's exactly it. I mean, right, I'm fudging a little, but there you go.
So just to put this, if we can do maybe a 10-year chart or a 5-year chart to maybe put in context so this has outperformed NVIDIA. You're talking about 0 to 250. NVIDIA, it doesn't even come close to that. And if it does, then I'm misremembering, but it's like the best performing stock, bar none, in the US market. And so the question is, right, is this sell-off, this pullback of some 30%, the reset that allows it to go higher? And so I think it is a reset in the context of a runaway bull. And if we have a daily chart with a 150-day moving average, you'll see that stock has sold off, of course, where? To the penny.
Right.
To that 150-day moving average, and it'll more often than not be at a juncture where you can play for the bounce. And so let's see if we get that just for fun, because it'll be
look at that.
There you have it, right? And so I think that's what this is. That's about a 30% sell-off, again, in a context of something that was essentially $4 or $5 that went to 220.
Elf beauty. I mean, think about that. Neither one of us saw this coming, but I think we did a decent job sort of handicapping that. So that's why, see, I know you're qualified to do this stuff. That's why I don't worry about it. Griffin Keenan. Hello, Griffin. Thoughts on the SMH chart? Thank you. So I've been in the camp correctly. It looked like a couple of weeks ago, but not so much now, that the SMH, if you pull up a chart, Amanda, would trade back to those prior double tops. And those double tops were very well defined in the form of 165. You go back to, I think, December 2021, January 22, and then again, I want to say in the summer of 2023, and you can see exactly. And if you put a line across those tops, you'll see that, forgetting about what just happened, those tops were actually in place for quite some time. I mean, we saw those tops hold up and then a pretty significant sell-off into the winter. Obviously, when we got back to it, you see what's happened. We exploded through it. Gotcha. And that was in large part of NVIDIA. NVIDIA, I think at one point was 27% or so of the ETF. Now what? Well, here you go. So a couple things. AMD has obviously given its entire move back. Really, if you think like I do that SMH is going to go back and take a look at those prior highs, that 165-ish, by definition, you have to think that there's going to be a bit of a hiccup here in NVIDIA. I am one of those people that thinks that. I'm not suggesting I'm correct, but I do think there's a chance, a decent chance, that those prior double tops that were violated in that winter, I guess, of 2023 or so, are going to be retested, and that's in the form of 165. So again, that's the question was asked. That's my answer, Carter Braxton Worth.
Yeah, consolidating after an important run up and then an important sell off, right? And so more of a pair of twos here, or one could say, hey, you hold it if you have it.
It's interesting. Situation Room is asking, what are Carter's thoughts on Amazon breaking through its prior all-time high? You had a pretty well-defined top in Amazon.
5-year chart will get us done. You'll see
I think it's trading 191 or so as we're sitting here. So what do you think? I mean, is this an official breakout, or is it still too close to call?
Yeah, no, you're there. You approached it. You've dipped from it. You're reapproaching those highs. I would say it ultimately is able to move higher. But the question is, in order to get a definitive breakout, you need a catalyst, right? So what causes a breakout that all of a sudden the stock gaps up 12, 15%, as was the case with Google from its former high or so many others, is in earnings. We don't have that. That's out of the way. And so can it push higher, work higher? Yes, but not likely to gap higher and break out in the sense of a breakout moment.
Lululemon, we got one more question. This is from Niran. Can you look at Adobe and Lululemon as proxy of things to follow? I don't know if Lululemon is necessarily a proxy. What I'll tell you is, when these, history is littered with sort of specialty retail that when there is growth, there are no stopping the stocks, without question. The problem, of course, is when there's signs that growth is waning, those stocks come crumbling down. And as great a brand as Lululemon is, it is not basically insulated from what I just sort of laid out. And you're seeing it play out real time. I guess the good news is you've had a pretty dramatic sell-off. I mean, I think this is a stock that went from north of $500 to below $340, almost in a straight line. We're sort of bouncing along the edges. I mean, I don't know if there's anything all that compelling here to you. I still think there's some consolidation that needs to be done. What are your thoughts?
Yeah, just that. I mean, after that kind of volatility, news related, that's what the drop in gap is, you're likely to get less volatility, and that's starting to happen. So a big run up, a big collapse, and now figuring itself out, if you will. And so that's the kind of thing where, again, I would bet on further backing and filling.
Great Carter Braxton Worth, ladies and gentlemen. As we sit here, we started the show with TLT prior to that bond auction. So that was a prescient call, as they say, because as I mentioned, prior to the TLT was trading about 90.15 or so. Now it's up around $90.60. So, not a dramatic move in terms of what we've seen for stocks, but in terms of the bond market, it's a decent move, which suggests 10-year yields are probably lower than they were when we started the show, which is what Carter thinks is going to happen moving forward. So I want to thank you. But before we get out of here, Carter, you like swag and all those things, right?
Swag's nice. Yeah,
well, you don't. You're humoring me. But there's still a chance to get into the CME Commodity Challenge, and you can read it for yourself. But basically, sign up for this thing. And if you enter, we're going to send you a shirt. Why not? And those shirts are badass.
Look at that logo. That is with
it's pretty cool, right?
White. Yeah.
That is, by the way, that's a combination of Timmy, Jacob, Amanda, everybody, the collective heads together, and they come up with this. It's a nice, that RK in the market call. I mean, I don't know what color that is. Maybe Amanda can tell me in my ear. Sort of like, would you consider like a fuchsia or something? Or teal?
Yeah,
I don't know.
Teal's a little. No, it's a darn good color juxtaposed against the black background and the white other letters.
I like what you did there.
Yeah.
So there you go. That's how you enter. It's pretty straightforward. Take a screenshot and figure it out. I mean, not that hard to do. Oh, Jacob's telling me what the color is. Oh, he's not. Oh, maybe he is. It's cyan.
Who knew?
See, well, Jacob did. And if you like the trades, I mean, you want to get them in your inbox? Why wouldn't you? I mean, take a look at this. Trades ideas in your inbox. Sign up today, riskreversal.com. I'm sure you have already. There's always other people out there, maybe some newbies. And by the way, we have a Carter Worth slide as well. So throw that bitch up because I love this. This is a great picture of you. I mean, Amanda's probably sourcing it right now. But
I mean, you can just look at me right here.
No, we don't have to. Look at that. Worth charting. Old-fashioned technical analysis. Nothing slick, just charts. I would have come up with the rhyme, as I've mentioned a number of times.
What's that rhyme you have?
But you don't like that,
No.
so we're going to stick with that.
It's all good.
Dubs, thank you for joining.
Yeah.
Carter will be on CNBC's Fast Money in approximately 3 hours and 24 minutes, if my math is correct.
I'll see you there.
So look forward to seeing you there. By the way, now look at this screenshot we have. Bitcoin, gold, death of the dollar with Michael Saylor. That's going to drop in your favorite podcast store tomorrow. I sat down with Michael yesterday. 45-minute interview, far-reaching, fascinating. There's absolutely no reason not to listen to that. That'll find its way into your, again, favorite podcast store, whatever that means, tomorrow.
Death of the dollar.
Death of the dollar. That's me. That's actually me taking some liberty here, but, whatevs. I had a lot of fun.
I had a lot of fun, too.
I want to thank the audience. Dan Nathan will be back next week. He's still in California. He's out there on one coast. We're here. We're chopping the wood. We're chopping the wood.
Did a lot of stocks.
We're chopping the wood.
That's right.
See you later, folks.